Hey everybody, welcome back to the channel. Today I want to go over the AM Silver Bullet on Tuesday, August 8th. So what we see right now is we see high buy side liquidity taken right here. We scroll in, we see some sell side liquidity taken here, right? So now we're looking to go long. Now for me to go long, if we mark this on our chart here just to have some context, so I didn't do that, didn't pre-mark that up for us. Right there, and we'll just mark buy side up here. It's taken right here. That's why we went short. Buy side's taken there. Could have got in right here and down. Would have been great. Okay, so for me, this would be a swing high right here. So I would need this to be broke for the market structure shift. So that'd be my target right here. Okay, that'd be the short-term high I need cleared, right? Why not this one? Well, this one didn't take out right now. It didn't take out a low, so that's just a short-term high. I want this to be a market structure shift because that's the swing high that took that out. That's structure, okay? So until we breach that, I'm not looking for longs. For me, I'm still bearish. We could just be in a retracement, okay? Just be clear on where we're at. I know it just took sell side, and we're looking for that, but we need to have our structure marked out properly. Okay. And if that takes it out, a different story. Does it take it out? No. Okay. Now I know you're going to say, hey, wait a minute. Now if this is taken out, what about this fair value gap? There is a fair value gap right there. If it comes in here, am I going long? No, I need this to be taken out. Okay, that's my structure. For me, that's the structure that I need to make. If it just comes in here and comes back, I'm taking it all day long. That's the 22 model, but I'm not taking it on this. To me, that's buy side liquidity has been taken. You could say a short-term high cleared. You could say a short-term high cleared. But for me, the market structure shift is right here, and I'm waiting for this to be cleared. I'm sure a lot of people took this trade, okay? I'm going to show you that if you took this trade, hypothetically, your stop would be right there. It's one tick below that. Aim for 2 to 1. So you'd aim for 2. You'd say at 8:30 a.m. opening price would be your target. Okay, I'm not taking this trade because for me it didn't break my rules. I'm showing this just for an example. So if someone comments that, hey, why didn't you take that first trade? It's not. I didn't take this trade because it doesn't meet my rules. I'm just showing you, because a lot of people did take this trade, how they could have avoided it was by using proper market structure. Okay? You know, I get a lot of comments on, well, I see it differently. You see it differently, by all means, you know, that is great. I see it a different way. This is why I did not take this trade. Okay? And this isn't cherry picked. This is a trade I did not take. So I'm just showing it because a lot of people got that. Twitter and other things I follow. They took the trade and they lost. So like, well, why was 2022 model setting up perfectly? Yeah, but where was your structure? What were you considering a market structure shift? Now you can use short-term highs that are not as high probability as you see here as this one. And market structure shift, if you were going to use this as a market structure shift with a wick, also lowers the probability as well. Okay, so had you had a candle close, it may be a little bit higher probability, but this is the result. So for me, I didn't take that trade. Okay, I'll leave that on here. This now becomes a inversion fair value gap because it has traded down. It was a bullish fair value gap. It traded right through it. When this candle closed, that makes that an inversion fair value gap. Okay, we also have a fair value gap right here, which is right here. And for me, if this was the liquidity sweep, taking this buy side right here into the new week opening gap, then this is my break of structure. Why not this one? This is the swing low that created the swing high, yes. So technically, yes, it can be here, right? You can use that, that's fine. We'll use that. Why did I have it marked over here? It's lower. And it's the same candle that breaks both. So I just used the lower one. It's really all it is. Had this candle closed up here, I would have used that one because that really is the market structure shift, but that's lower. This one has lower candle bodies, so you can use that. Either way, it's the same thing. It's the same candle, so don't get tripped up on semantics. This is not. This is true market structure. This is market structure, and I'm using a further one. I'm not using a higher low for market structure. I'm using a lower one. So I'm making it even harder to classify it as a market structure shift. Anyway, I just want to point that out. So we'll see if it comes back, trades back in. We'll take a short. Oh, so close. Look at that. So close. That would have got us in right there. Oh, that stinks. Well, so I would have sold short there and got in right there. Why right there? Well, because we would have been trying to get to this inversion and we would have seen how far it goes and got in. But now I have to take my order right here, which really sucks. That's a crappy fill from TradingView, man. That's a crappy fill. But you know what? We'll take it. It's fine. It is what it is. I just threw my whole thing off. I'm not even taking a partials on this one. Stop right there. Ugh. Alright, well, we're flattening. We're flattening there because it would have taken us out. That's just being fair. Technically I got in here. We were targeting the new week opening gap. It's 9 points, but instead we got, 6 maybe. So that's trade 1. Let's put our buy on there. And let's just see how it trades back. See, I could have stopped there, would have been a better fill, but in fairness, that one would have taken us out anyway, so we stopped there. Now, I'm anxious to see if this holds. If this holds again, I'll probably take another trade. Now, granted, I already took one, so I probably wouldn't have taken it. I probably would have tape read it. Either way, if it comes back in here on this, I'll take another trade. Maybe I'll get a better fill. And let's see how it plays out. Okay. I'm selling 2 there. That's where a real good fill would be. So let's see where I would take my partials at. Probably down here. Let's say sell 2. I'll take our same exact order as this one, down to the new week opening gap. Let's see what happens here. Bearish volume imbalance, good to see. Means bearish order flow. Another one. If it closes there, another one. That's good. Oh, if I wish it would have just closed right there, I would have taken a one off close. All right, perfect. Took one off there. That's about 60% and maybe 70%. Stop is now at break even. One tick above break even. For this example, oh yeah, there you go. I'm going to take that one to flatten, just so I can kind of catch up for a little bit of this right here from that. So make it a little bit more truer, even though it's still lower than it should be. But let's see how that's the rest of the hour. Take us to 11:02. All right, let's take these off. And let's see what we happened here. Okay, so we started off looking back before the 10 o'clock silver bullet hour started. We saw that buy side liquidity has been taken, and then we trade through new week opening gaps and we take out sell side. Okay, so for us, we're looking at, okay, if we run a reversal, a 2022 mentorship model, we need to see a sweep of liquidity. Got it. We need to see a market structure shift. Where's our market structure shift? For me, it's up here, because that's the swing high that created the swing low. A lot of people use just a short-term high. They call it a market structure shift, and they would use this one or this swing high. I guess you could use this one as well. So all three of those, one of those three, a lot of people used. Okay, they saw that they got traded through with displacement for this one and this one. This one was just through by a wick. They saw it left behind a fair value gap. It came in and traded in and left it. A lot of people took this trade to go long. I showed it to you. I did not take that trade because I was looking for a different market structure shift than the short-term highs. Price came through, traded through, and took you out. Okay. When it did so, it turned this fair value gap into an inversion fair value gap. And notice that it comes to the tick, the wick does, on both times, leaving that inversion holding price down. Price came up into it, left behind a fair value gap, and we took our trade. We took our target at our new week opening gap. Okay, price traded back up, came back down, traded back up, stopped exactly on the fair value gap and the wick to the inversion fair value gap, telling us that these are still holding. We took another trade. We took a partial at 60%, and then we wrote it down to the new week opening gap. Okay, so that is your 2 Silver Bullet AM session trade setups for August 8th.